Good afternoon, traders, and welcome to the In the Zone Daily ACD Recap for Thursday, May 26, 2016. In these recap videos, I go over the best ACD setups that occurred on this day. These videos are intended to show you the types of trades the ACD method offers on a daily basis. Well, let's get into today. Today we had kind of a slow day, and I think a lot of that has to do with we're approaching the Memorial Day weekend here in the U.S. and I think it's causing the market to be a little bit slow. Today we opened up with our opening range here. You can see with the gray area, high and low, and our first push down this morning was our first push, I should say, was down this morning. And this gave a good trade to take here, fading the A down. Let me bring up a 1 minute chart so we can look at it a little bit better, closer. You can see as price came down, you'd want to fade this move, okay? And we finally got a fade that worked. We've had a couple of that haven't here recently. But this was a nice fade off the A down. So, 85 and a quarter here is your buy point. If you use an 11 tick stop, you're going to be down here at 82.50, and you're going to wait for 5 minutes to see if this can confirm. And in this case, it didn't. It barely spent a minute here and then turned around and bounced. Now, a couple of points to make about this. Notice that this formation on the 1 minute candle, this is a morning star pattern. Okay, this is a good thing to see when you're fading the A. Okay, because this means a reversal in candlestick patterns. Okay, so this is a nice morning star. And it turns up and gives a nice little push up and then comes back down. Now it comes right back down to your entry, but if you'd hold on, okay, and hold for, your stop is either an 11 tick stop with today's current volatility, or it confirms the A. Okay, so if it confirms the A down, then you get out. So here you'd want to still be holding because there's no reason to get out at this point. Okay, comes down, puts in a higher low, and then reverts back up to the bottom of the opening range. And at this point, this becomes a very important part to look for. You want to watch and see how it reacts to the opening range. And in today's case, it came back and was able to close. I'll bring it. Let's see. Let me just put this down. You can see that. Here, find out where I'm at, right here, this bar closes back into the opening range, and that's a really good sign. This is a sign to hold on to see if we can't push all the way through the opening range and up to the A up point, because if it can't confirm the A down, then maybe it can confirm the A up. But even with this closing bar, price couldn't push much higher into the opening range and then rolls over. So in handling your trade, you're going to have to decide, you're going to have some guidelines for yourself to determine where you're going to get out and take profit on part of your position, and when you're going to close out the trade. Okay, and those are all going to be personal decisions that you're going to make based upon your own goals as far as profit targets and risk management. Okay, so today from 85 and a quarter, it made it up to 90, so it's almost 5 points here. So this is a nice move to make, and that's exactly what you want to see off of a fade of the A. Now I want to go forward a little bit in time, okay, and show you that around 11 o'clock hour, of course New York time here, we confirmed the A down. Okay, so you could count this as 1, 2, 3, 4, and 5. These bars basically spent 5 minutes underneath the A down. So this would confirm the A down. So if you've gotten out of your fade and now price rolls over and it comes back down and confirms, then if you want to get short here, remember I always say with an A down, you always want to wait for a bounce, because you never want to sell in the hole. So again, going forward, a good place is right here at the bottom of the opening range in here. Any of these places would have been a good place to establish a short. Okay, let me bring this down here. So anywhere in here would have been a good place to establish a short based off of this A down here. And you're looking for a price to rotate down and you want to see it continue down. Now that's not what happened today. It came back down to the A point here, found support, and came back, closed back into the opening range. When this closed back into the opening range after this confirmed A down here, this is the time to get out. Don't be stubborn, get out. And then the price was able to keep pushing up into the opening range and closed into the opening range. Now this day on a macro scale is called a zero. This is a 0 day, okay? You opened here and you closed here inside the opening range, and so it's a 0 day, and that's exactly what we had 30 days ago. So 30 days ago repeated again today, okay? Even though we had this narrow range pivot range that usually points towards volatility, today we didn't have much volatility at all, and the opening range couldn't engulf the pivot range. But I think we just got caught up today in some holiday trade, people not trading much as we're going into the 3-day weekend here. So these are points that if you'll keep in mind, fade that first touch of the A, hold it for as long as you can, as long as it's going in your direction. When you get a closing bar back in the opening range, that's a good time to just hold. Now today it didn't work out that good. It's a good sign. Normally that this thing can push even higher. When it rolls back out of the opening range and down here, if you're still holding your long from a fade here, you're going to have to ask yourself, okay, where am I going to get out here? Where am I going to manage this trade? Now you could manage it all the way down here, and once they confirm the A down, then you could get out, but then you're going to have to take profit along the line here. You can't let this thing go all this 4 or 5 points in your favor and then come all the way down and stop you out for a loss. That's not smart. But once it confirmed the A, this was your area to short, okay? And then as price was coming down, you're going to take some profits in here somewhere and hoping for a bigger push down, but you didn't get it. And if you're still holding, this close back into the opening range is your point to get out. And then of course, once you get out, this is just nothing more than chop inside the opening range, okay? All right, guys, that does it for today. Sorry this video was up late. It's Thursday, and I have to take my daughter to gymnastics on Thursday, so it's always hard for me to get this done early. But we look forward to talking to you tomorrow. Tomorrow, it's going to be Friday before a 3-day weekend. I imagine that might not be much of a trade, and you definitely want to be done early, and the trade might be early in the morning. Okay, guys, see you later.